Good morning, ladies and gentlemen, and welcome to the ECSC Group PLC Interim Results Investor Presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated on the right-hand corner of your screen. Simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. These will be available via your Investor Meet Company dashboard, and we'll notify you by email when these are ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, I'd like to submit the following poll. And now I'd like to hand you over to Ian Mann, CEO. Good morning.
Morning, Alexander. How are you?
Very well, thank you.
Okay, thank you everybody for joining this morning. Welcome back. Our quite a few investors I know are on the call this morning. So welcome to those, and welcome to people who are new to ECSC. I've got myself and two colleagues that I will introduce shortly. So I'm going to do introductions, and then we're going to explain a little bit about what ECSC does, so give you an understanding of our services. You can see from the title that we're cybersecurity and include artificial intelligence. So we're going to give you a little walk around the services that we do, then dive into our interim results, look at some KPIs that we maintain that give you a good insight into the performance of the company, talk a little bit about outlook, and then open up to questions. We'll try and answer every question, and if we can't answer them live, then we go through them and do written answers where we can following the presentation. So I will skip past the obligatory disclaimer. So myself, CEO and founder of the company. Lucy also joined at the inception of the company and is now Chief Operating Officer. I tend to focus more on managed services and development of new services. Lucy manages day-to-day operations of the business and also manages the consulting team, which for us comes under the assurance division. Gemma joined us 10 years ago, is now CFO. Gemma will be just walking you through a few of the KPIs as we go through. So that's the team for this morning. So I'll hand over to Lucy, who will talk a little bit about the services that we offer.
Morning, everybody. For those people that have not met us before, this slide just gives you an outline of some of the services that we provide. They're very much split into two sections. So, as Ian mentioned, the MDR services under the managed service division, and the assurance division, which is our consulting arm. So Ian's going to talk to you a little bit more about managed service and what that entails, but we run that from our Bradford and Brisbane based SOCs, and that's outsourcing. Our clients outsource their security provision to us. The assurance arm is where we provide consultancy services, and that's the time and materials. That's our consultants that are based all over the country. They're currently working remotely, but they're providing services to our clients such as pen testing, or penetration testing, which is hire the hacker type services, where we're finding our clients' vulnerabilities and helping them fix them on a technical level. And then there's accreditations and certifications that we help with, such as PCI, which is the payment card industry standard, which is for any organisation that's storing or processing credit cards. So we help them get to that certification. There's also 27001, which is an internationally recognised framework for any organisation that wants to improve their information handling in terms of security. We have Cyber Essentials, which is another recognised framework, and that's more for SME markets, so the smaller organisations that want to demonstrate their security provisions. We do something called cybersecurity reviews, which is an amalgamation of everything we've learned in cybersecurity. It's best practice, it's taking into consideration the other frameworks I've mentioned, but it's very much pitched at the board level of our clients to give them an appreciation of where their current risks are, to help them prioritise what they need to do to improve that security level. We've recently added the ransomware preparedness into that service because that's quite a hot topic at the moment and something that lots of organisations are concerned about. So as I said, consultancy's done. It can be 2-3 days a week, or it can be longer relationships with clients. It's not necessarily contracted, but we get lots of repeat business in that area. Gemma's going to talk about that. Managed services is contracted, so that's 2-3 year contracts that can run for quite a while, and our clients tend to stay with us for that. We've had some very long-standing clients in that area. That's it, bit of a whistle-stop tour of what we do, so if there's any questions, please ask.
Okay, thank you, Lucy. So I'll move on and talk a little bit about the security operations centres. So the images you can see there are from our Bradford Security Operations Centre up in Yorkshire. And Lucy and Gemma are in the studio that we've got in a building opposite. We also have a mirror facility in Brisbane, Australia. So we don't have directly clients in Australia. Following the IPO and the investments we made, we rebuilt the UK Security Operations Centre, and we created one in Brisbane, Australia, and that's to give true 24/7 coverage. So hacking activity can happen anytime in the day and night. As you'll be aware, a lot of hackers are coming from other countries, so you've got to be as watchful of your security in the middle of the night and on a weekend and a bank holiday as you do during the working day. So for organisations to do it themselves, they really have to have a global presence and have people that can cover 24/7. And so that's a key benefit that we bring to clients, is that we've got the true 24/7 coverage, and we're not having to employ people on night shifts to do that. There's pressure on recruiting in our sector, which helps us because clients find it difficult to get the expertise themselves in-house. But it does mean that if you want to keep the best people, getting them to work nights isn't a great strategy for retaining the best people in this area. So we think having the Australian facility is really key to our success. An explanation then of how technology plays a role in here. So you can see we've got people looking at screens, and there's a place for people and there's a place for the technology. And this slide nicely shows with some metrics the service to a client in a given month. So this is a client who's buying the 24/7 monitoring and alerting service. So the artificial intelligence takes feeds from their IT devices. So these can be devices in the cloud, they can be traditional servers, network devices, laptops, mobile devices, etc., desktop computers. So any IT device generally is capable of producing a stream of logs that say this is what I'm doing, and shows the behavior of that device. An analysis of the behavior of devices is generally one of the best ways to detect breaches. So what you've got here is 1,276 devices, so a sort of medium to larger organization. In a single month, they generate 3 billion logs. So that gives you an idea of the scale and the volume of the big data that's generated from just a single client. The artificial intelligence analyzes that and correlates the data and narrows it down to 259 alerts. Now, if clients try to do this themselves and buy the latest technology from a vendor, that's really all that they will get. They will get some level of intelligence that gives them a certain level of alerts for them to try and understand themselves. And that 259 alerts in a month, that's about normal for a sort of medium-sized client. Now, if somebody's trying to do it themselves, they've got to make sense of that, and they've got to respond to those alerts 24/7. So this is where the people come in the Security Operations Centre. So the bottom line is the people have taken the 259, and out of that, they've made 59 requests to the client. So this is saying to the client, we don't think this is a breach, but we'd like some more information related to these alerts because we would like to understand more about your systems and potentially tune the system, continually improving the performance of the system. 5 have been raised for immediate investigation. This means we have some concerns here, probably not a breach, but we're quite cautious and quite risk averse. So therefore, we'd like you to get information on these in the next 24 hours because we want to understand these quite quickly. But then 1 confirmed breach, and that's on a 15-minute SLA. So the client finds out within 15 minutes. And if that's happening out of office hours, which tends to happen, then we'll be phoning various people and waking people up where appropriate. And that early warning, the hot topic, as Lucy says, is ransomware. This early warning is the most crucial aspect of dealing with ransomware. Ransomware tends to be deployed at a period of time after somebody has been breached. And that period of time can be as short as a few hours, but more commonly, you're talking about weeks, days, weeks, or even months from the original time somebody's got breached to when ransomware gets deployed. So we have usually have an opportunity to spot a hacking activity, intervene, create an incident response, block the attacker, and deal with the attack before it escalates into ransomware. And we've got an excellent track record of dealing with ransomware before it becomes damaging for the organization. We, of course, deal with ransomware where companies are not buying this service. Our incident response people can just call us and we'll respond if we've got the spare capacity at the time. So we do deal with incidents outside of people that buy our monitoring services, but clearly the 24/7 monitoring just allows people to respond a lot quicker and get the experts looking at the breach. So that's a nice illustration of how artificial intelligence takes you so far, but you still need people. The National Cybersecurity Centre estimates we're a couple of decades away from being able to replace the people completely, and we agree with that, which is why we run the 2 security operations centres in the UK and Australia, because the people part is still really crucial. So let's get into the financial highlights for the period. So it's really a story of return to solid growth. So following a dip last year with COVID, we've seen the NDR division return to growth of 17% and assurance to 20%. That translates overall into a 15% growth. The reason the overall is less than those 2 divisions is because, as Lucy says, we are currently delivering the vast majority of our services remotely. And the period we're comparing with last year had the first 3 months of the year when we were doing the majority of our work on client sites and there was associated expenses. So you've seen slightly less revenue growth because of the decline in client expenses. Gross profit is up 24%. And we're still in profit on adjusted EBITDA level. Our cash is pretty static. It doesn't look at it at first sight. You have to really go into the footnotes. A year ago, we had 1.26 million, but that included 770,000 of government COVID-related support. And we've been paying that off since. So now at 0.59, that only includes 140,000 of government support. And these figures are pre our annual payment of our R&D credits as well. So that's been paid since the period end. So good return to growth across the business. And how that's spread across clients, we don't make public client logos. So private investor briefings, we do show which clients we're working for. We don't detail what we do for specific clients, but this shows the spread of our top 5 clients for the year, and you can see we've got a nice spread across different sectors, and not only one client accounts for more than 5% of our revenue. So we don't have any strong reliance on any one client at all. So I'll then hand over to Gemma, who's going to just highlight a few of our KPIs. We've established these for quite a few years. We find these really useful because rather than people trying to extract meaning from the detailed accounts, we do that for them by publishing what we think are the most important KPIs to show the performance of the business. So I'll hand over to Gemma.
Yeah. Morning, everyone. So these are our key KPIs that we measure. So following, our strong growth, we have invested in the MDR area, and that's why you see the margin has gone down. So that's where we've kind of put a lot of investment, because that's where we get a lot of profit from our clients. So we hope to, in the future, that will go up. We can get more efficiencies in that area, so that will go back up into the 70s and become strong. We've also been building strong relationships with our assurance clients, and we offer a wide range of services. So that meant that increased our repeat revenue, which has gone up to 83%, as we continue to offer lots of different services and high quality work. Our assurance gross margin has also increased, and this is down to, we're delivering a lot of the work off-site, so it means that we've got more efficiency in the diary. Although going forward, we expect that to drop down below the 60s. just so we can maintain the kind of the quality and not work the consultants so hard. We've also continued to invest in R&D as it's up 16%. So again, that's part of the investment in the managed service division, as we want to make sure that, we keep in strong ahead of the game and invest in that area.
Okay, thank you very much, Gemma. So in terms of the market opportunity, we've got at the start of last year, the UK government estimated the market at 8.3 billion in the UK. We think that's quite high because it's quite a broad definition of what's related to cybersecurity, but it shows that the market is big enough that it's not a constraint on growth. We've got the proliferation of breaches, particularly this year, with more attention on ransomware. And in the background, we've got GDPR with some hefty fines that have already, despite COVID, have still been issued to companies like British Airways and Marriott Hotels. So there's a strong regulatory framework that people need to comply with, and the legal requirement to report breaches. It's regarded that the market is growing at about 9%, so we historically grow at a rate of approximately double the market. Investment case is really significant market opportunity, and we've got the track record of organic growth, so we don't rely on acquisitions. Moving back into profitability, the experience of the management team and the diverse client base. Unlike competitors, we have our own technologies, our own intellectual property, and we're the leader in artificial intelligence developments in this field. And as you can see from our ongoing R&D investment, that's an area that we'll continue to invest in. And our true 24/7 capability because of having the Australian facility so that we can respond at any time through the working week. I think people underestimate the resource required when you move to 24/7. The reality is you're moving from coverage of 38, 40 hours a week to 168 hours. So that's a significant resource implication for either service providers to do that properly or for people to do it in-house. And the fact that we created that with the investment following the IPO means we've got a significant advantage over competitors in our space. These are the people that we compare our performance against. There's a market cap earlier in the week, and an indication of which ones are making a profit and which ones aren't. So these are the either AIM or in NCC's case, main market UK floated organisations. So those are the public companies that we compare ourselves against and measure our performance against. So in summary, still organic growth. We look at acquisitions, but we'll only seriously go down the acquisition path where we think there's value for shareholders. In most cases, you're acquiring businesses either to get more revenue. Well, we've got a track record of organic growth. We don't need to acquire people to build revenue and to gain new clients. Or you're buying technologies, and given that we've a track record of developing our own technologies, if there's gaps in our technology suite, then we develop that ourselves. So hence we can stick with an organic growth strategy and still be successful. That focus on managed detection and response. Somebody actually asked a question on this, stating that our percentage of revenue has gone from 29% MDR when we floated in 2016, and now it's nearly 50%. And that has been the stated intention. The managed services is potentially much more profitable because you can leverage the technologies and the resources there, rather than consultancy, which tends to be a consulting person per consulting day that you sell, so you can't leverage too much out of that. So focus on MDR. The assurance services are still great ways to introduce ourselves into clients and provide value for clients and identify opportunities for managed services. We've now got a focus as well on really being quite strict on measuring profitability per client and focusing on the more profitable longer term clients. So we're not focusing as much on number of new client wins, but more getting value out of existing clients and winning the right sorts of clients. And that strategy on scaling the business. We'll keep investing in our proprietary technologies. We think that's really important, gives a lot of advantages to our clients. and continue to invest in people and develop people to deliver those services. So that concludes the presentation. So we can move on to the Q&A. I'll briefly hand back to Alexander, and I'll start to go through some questions.
Ian, Gemma, Lucy, thank you very much for your presentation today. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the top right-hand corner of your screen. But just while the company take a few moments to review those investor questions submitted already, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard on the Investor Meet Company platform. I would also like to remind you that your feedback is important to the company, and immediately after the presentation has ended, you'll be redirected with the opportunity to provide feedback in order that the company can better understand your views and expectations. Investors had the ability to pre-submit questions, and you've also received a number of questions during today's presentation. I just wondered if perhaps I could hand back to you to read out those questions and give a response where it's appropriate to do so.
Okay, thank you very much, Alexander.
Thank you.
I'm going to start at the bottom with the questions that have just been submitted, if that's okay. Just because if people are waiting for a response to their question, I'll deal with those first, and then I'll go through the pre-submitted ones. So OJ has asked, how much spare capacity do you have at your operation centres, and will this restrict your ambitious growth targets? We always have to keep some capacity, because the team who do the 24/7 monitoring and are there looking for incidents also support the specialists who do incident response. So we have to be able to draw upon the security operations centres to help when there's an incident. So we have to always keep some spare capacity there. But we've got a really good track record of developing people, taking people from university, from colleges, and also from school as apprenticeships. So we train people in that area. So we have student placements, for example. So we do a lot of work in that area. So we don't see that as a constraint on growth, because we've got a good track record of bringing people into that area and developing them. So we don't see that as in any way hampering growth. Peter's just asked, how does our AI service compare to that from Darktrace? So at one level, quite similar. Darktrace is usually sold as a device for you to do it yourself. So most people with Darktrace are not buying the managed service. Darktrace originally said they wouldn't do managed services. They now do managed services. So you can buy a managed service from Darktrace. So we both have artificial intelligence. The things we're looking at are slightly different, in that we're looking at the behavior of devices and what the devices are doing. Darktrace tends to look at what's happening on the network. So some might say it's an older-fashioned way of doing it, but they're applying new artificial intelligence to how they do it. But if somebody particularly wants the benefits of Darktrace, they can feed that into our system. So we can take feeds from anything, because we own and can develop technologies. So you don't necessarily have to choose us against Darktrace. If you've got Darktrace, we can take that as a feed and still provide a 24/7 managed service. So Roger's asked, can you spell out, please, what exactly has to happen so we can get back to the good old days when dividends could be paid? So I don't recognise Roger as a pre-IPO investor. So I don't know if that's somebody else and they're in a different name. So yes, we did used to pay dividends before we floated, but we said that the investment and the IPO was about scaling the business, and we would get back to dividends in due time. You may have noticed recently we've gone through the required legal process to remove our historic losses from all the investments of IPO so that we could pay dividends. So we've prepared the ground so that as the profits feed in from growth, we do have the option of either purchasing our own shares if we think they're undervalued, or we can pay dividends. So watch this space, Roger. We've always said we would return to paying dividends at the appropriate time. Sam's asked, you mentioned the client acquisition strategy under review. Can you elaborate? And how is the partner program progressing? So we've taken the opportunity with COVID to really examine all aspects of the business, and that's an ongoing process. But there's a couple of areas that we've learned a lot in COVID. So if you'd asked us pre-COVID, can you win a new client in either division? without face-to-face meetings, we'd have said no. We firmly believe that our client acquisition strategy needed face-to-face meetings. Clearly, when COVID hit, we couldn't sell face-to-face. The result of that, we found for winning new clients in assurance, our actual proposal to sale ratio increased. It had traditionally been mid 60%, so 60% plus of proposals turn into a sale. It moved to 70+% in COVID. So what COVID shows is that, or showed us, is that for assurance clients, we can win that service by selling remotely, which is a lot more efficient. We also moved our traditional face-to-face events, our free events, we moved all those into webinars. We've had a lot more attendees on the online webinars. So we are going back to face-to-face events, but they're paid for events and really quite specialist events. So we've learned a lot on the sales and marketing side around what works remotely and what doesn't work remotely. And the partner program equally, the partner program, we're finding that most partners are preferring just to refer business to our sales team and let our sales team sell rather than sell themselves. So there's been quite a few changes, and we're adapting for what we've learned through COVID and re-evaluating, and Lucy re-engineered all our consultancy services within 2 weeks that could all be remotely delivered as well. So that opens up opportunities for consultants to work more from home. And that can be, some clients like that because it cuts down on expenses. Consultants gives them more flexibility and potentially more efficiency in diaries, as Gemma was saying. So I'll look at the pre-submitted questions. First one was, how will central cost rise as the company grows in size? The only significant central cost rise is additional security operations centres. So we have plans looking into the future to create resilience in the UK. So we've got the resilience and time between the UK and Australia, but we'd also like some resilience in terms of facilities. So if you lose one facility, you've got another one locally. So we intend to build a second UK security operations centre to give that resilience in the UK. And at the moment, we have 2 global centres, which means relatively long shifts at each of the 2 centres. So looking even further ahead, we'd like a 3rd global location so that we can do shorter shifts. So at the moment, we have relatively long shifts, UK and Australia. If we had a 3rd location west of where we are now, but east of Australia, somewhere in the Americas, then we can deliver a 24/7 with shorter shifts. So that makes sense as well. Next one was with Ian Castle moving to a part-time role as CTO. What impact do you expect this to have on the business, and how do you hope to mitigate this? Well, Ian Castle's one of a team, so he's not the only. He tends to focus more on R&D work, but he's one of a whole team that does that, and you can see that by the percentage of investment we make in R&D. So Ian, as I'm sure lots of people are aware, had heart surgery last year, returned to work successfully, and that was all successful, and has actually returned full time, but then decided that 3 days a week is a better mix for him, and we all agree with that. So Ian's here to stay, but he's happy with that 3 days a week, and we're happy to have his expertise still in the business and leading that excellent work we do on R&D. The next one pre-submitted, could you comment on the significant increase in sales and marketing costs? Is this likely to continue in H2 and beyond? Yeah, so what you're actually seeing there is not necessarily a big increase in sales and marketing. What you're seeing is that there was a dip last year. So last year with COVID, remember that this period compares with the 3 months of highest impact in COVID last year. So what you've got there is a big dip in sales and marketing expenses and activity in that period, and that's what you're comparing again. So what you're really looking at now is more a normal level, and if you compare it to 2 years ago, you'll see that it's more a normal level. The next one is about growth in MDR. I think I've covered that. It says, you mentioned the statement that your assurance division is key to new client acquisition and is delivering an increasing proportion of repeat revenue. Can you provide more colour around this? Yeah, so I'll just be clear on terminology here. We're very strict on what we mean by recurring and repeat. So for us, a recurring revenue is managed services 1, 2, 3 year contracted revenue. Repeat revenue is where we get clients repeatedly buying consultancy services in the assurance division. We have clients who've been buying services for 15 years plus, and no doubt will keep buying year after year, but they're not contracted to do that. So repeat for us is defined as the proportion of assurance that has come from people who have purchased from us in the last 2 years. And you'll see that where that's 83% of assurance revenue, and that revenue has grown by 20%, then we've got pretty much almost 100% of last year's assurance revenue was repeated into this year. We've got another one on, does a widespread review of ECSC's client acquisition strategy and operations that you mentioned in the statement mean a potential change of strategy moving forward? I think it depends what you mean by strategy there. If you mean strategy of cybersecurity specialist services, offering high value to our clients, developing great people, and primarily organic growth, then no change at all. If you mean a more intelligent approach on how we select clients and develop clients and choosing clients, then I think that's where the strategy is changing. I think since IPO, we've had a strategy of getting as many clients as we can, and there's merits to that in scaling. But I think now we've got a much clearer picture of where the potential profits are and which clients are more profitable. And that's important in our sector because there are too many PLC companies in the sector who are working and losing money. So it's important that we really focus on where the profit is. Will return to office work cause a spike in cybersecurity incidents and increase business for ECSC? I would say, I had an investor ask this yesterday, and my first thought is returning back to the office is generally returning to an environment where the security is better than people working from home and working in the cloud. But any changes that IT teams are making tend to lead to mistakes, and mistakes tend to lead to things being opened up and people causing vulnerabilities. So any new changes tend to lead to people making mistakes and breaches happen. So returning to offices in itself isn't particularly a risky activity, but just change causes breaches. So I don't think the return to office is that significant. Does the company plan to make any acquisitions, or does it see sufficient organic growth opportunities? I think we've made it pretty clear that we see the opportunities in organic growth. Unlike some of our competitors, the management team here across the board have got a high level of ownership in the company. So we had a lot of share options that were converted into shares at IPO. We've got share options now. So there's a high level of ownership in the management team. So the management team are really quite focused on shareholder value and will not just do acquisitions for the sake of boosting revenue. We've got to see real value for shareholders before we will do that. So as long as we can develop our own technologies, fill in any gaps there, and we can grow organically and keep successfully doing that, then we're not under any pressure to do acquisitions. Next one is, are there any main changes affecting the industry, and how is the company responding to these challenges? So the general trend in IT that is affecting cybersecurity is the ongoing introduction of new technologies. New technologies tend to come with security problems. So it's mature, well-proven technologies that tend to be more secure. New technologies tend to mean new security problems. So speed of IT change always causes security issues. Moving into the cloud, which we saw accelerated in COVID, that tends to cause security problems. The attackers are focusing more and more on ransomware. And that's the effect of that is that they tend to get paid more because people have to pay the ransoms. But ransomware is particularly damaging in terms of damaging to operations and people losing business and losing clients as a result of having a ransomware attack. So we see ransomware because it's so damaging that keeps going in terms of the board awareness and people wanting to purchase the services. And finally, I've got a question from Peter. What do you think is your medium-term revenue growth rate? I don't really want to state the future. We've got a research note out from Allenby, which you can look at the market expectations of our growth rate. historically, we've delivered an average of 20% growth a year. So we deliver good, solid organic growth and return for investors. So that's the comment I would make about revenue growth rate. So I think I've covered everything there. If there's any extra ones, we do get a chance to add to them later. So thank you very much for everyone attending, and particularly thank you for people that have asked questions. So I'll just hand back to Alexander to close.
Ian, thank you very much. I think you actually managed to address all the questions from investors today, and of course, the company will review any further questions submitted and publish responses where it is appropriate to do so. But just before redirecting investors for feedback, I wondered if I could ask you for some closing comments, and maybe I'll direct that to you, Ian.
Okay, thank you very much. So yeah, just thanks everybody for attending today and taking an interest in the company. And it's really great to be back post-COVID and reporting good, really strong growth across both sides of the business. So thank you very much for coming along.
Ian, Gemma, Lucy, thanks again for updating investors today. Could I please ask investors not to close the session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, however, is greatly valued by the company. On behalf of the management team of ECSC Group PLC, we'd like to thank you for attending today's presentation. That now concludes today's session, and good morning to you all.